background from myself. I've been in the industry for 30 years. Started in Norway, been living in New York and London before I took a job with the ship owner to set a 3-year stint here to understand a bit more about how the products that we're trying to sell as brokers is actually affecting the buyer of it. Before I joined a broker here and joined Gallagher here about 9 years ago. Gallagher has recently increased their presence in the region and are now 60 people. We started with 2. We are now involved in all types of different insurances. I thought I would like to just save it a little bit. I'm saying it's a marine team is basically based in London. We have 3 individuals here. We do 170 million gross tons of tonnage on the P&I side, so which would equate to the 3rd largest independent P&I club if we were a club. We handle over $20 million of value, $20 billion of value in port insurances. As a marine team, we put annually into the marine market $1 billion. Gallagher as a company was founded in 1927. We operate in 130 countries around the world, and we're about 50,000 employees. Manage about $73 billion worth of hull values, and I collect over the last 5 years about $750 million in claims. I think the most important thing about what our role is, it used to be a very transactional role where a ship owner would come to us and we would try to find the best insurance solutions on an annual basis, and then we did the same thing a year after. Our role has transitioned into being more of a advisory service and assist in contract reviews, whether that be charter parties or longer term contracts, contract of affreightments, and we want to be looked upon as an extended arm of the ship owner. So we're trying to get ourselves into a position where our advisory service is primary and the transactional service is secondary. Of course, the transactional service is an incredibly important thing for ship owners to have. It gives the ship owner a license to operate, and it gives the ship owner a license to trade. And not only that, it obviously gives a ship owner a license to get financing. And very often we are beholden on the loan covenants that the individual ship owners, whether it's a sale leaseback, whether it's a traditional ship financing, whether it's a ship investment fund, they will have requirements on how the insurances should be structured, what security should lie behind. And we as a company have access to all global markets. We try to focus on the niche markets within the regions that we're operating in, but we also have access to our specialty operations on the marine side, which is headquartered out of London. We have a strong presence in Scandinavia, Dubai, and the Far East in Singapore. And the Middle East is definitely a focus point for us because we see the shipping environment here is at the grasp of that rock, which Chris is talking about, coming to the top of the hill and starting to roll downwards and create more action. So how does insurance assist? I've gone a little bit into it. Obviously, we're meeting the lenders and financiers' requirements. From a financier perspective, lenders need to protect themselves. And they do that to 2 different products, which is mortgagees interest insurance and mortgagees interest additional perils. Now, if a ship owner is insured with A+ security and everything is fine, it will be approved by the lenders. But in the event the ship owner itself does something that is outside of scope of cover, something that's actually forbidden to do under the policy, and the policy doesn't respond, the mortgagees interest insurance will respond. If similar to that, if they do something which then also causes a oil spill, you'll have a pollution, and the P&I club says, well, hey, you've done something that you shouldn't have been doing, well then the MIAP insurance will come in and cover the lenders for the financial loss that they may have. we can't really get around the problem of sanctions and geopolitical situations. Obviously, the shipping industry needs to respond when incidents happen. We saw a tremendous amount of value being lost during the invasion of Ukraine. Ships being blocked. Some ships are still there. Some of the ships were worth $100 million, and they were lying there for a consecutive 12 months, which lends to a total loss under the policy. Obviously, it's the insurance industries want to assist the ship owner. We are here. If the ship owners can't make money because our regiment around how we handle insurances are too rigid, then obviously we don't have a job either. That goes for the whole insurance industry. Sanctions is an increasing issue, and it's changing, and it's something that we spend a tremendous amount of time doing. We cannot be seen to be involved because we are a facilitator, looked upon as a facilitator, if we are engaged in somebody's shipping company that does something that's outside of the law of the individual insurance company that supports them. So even if a UAE owner is allowed to trade to Russia and pick up oil in itself, not an illegal activity from a UAE perspective, but if they're insured into the UK or Scandinavian market, that's looked upon as a illegal trade or sanctioned trade. And unless the ship owner can then provide the fact that they haven't breached the oil cap price, then the insurance is a void. But primarily, we as brokers and the insurance market are also penalized for that activity, even though we are not actually involved in it. We're just providing insurance. You talked about a little bit, Ian, about the Poseidon Principles. As a company, we've signed up to that as well. It's less of a what we basically have signed up to is help collecting the data that needs to be collected by these underwriters who's also signed up to Poseidon Principles, where they need to have a reporting of what the individual companies are doing if they are a claims leader on the hull side. We think that the more important part of this is that even if people don't sign up to the Poseidon Principles, and even if a trade is not prohibited, what we've seen over the outbreak between Russia and Ukraine, there was a lot of companies in the market who then said, out of solidarity to Ukraine, we're not going to write anything that's got to do with Russia. And that's a self-sanctioning which is taking place. We think this is going to happen as well on the ESG side, which means that the market will shrink for operators who are involved in either not reporting their emission numbers. We are looking at trying to push the underwriters to give a financial benefit for you being able to provide documentation that you are doing strides to reduce your emissions, that you're investing in green shipping, and that your shipping is becoming more and more green. But I think we're a step away from that at the moment. I think the first thing that's going to happen is a penalty if you're not. And it's also probably similar to the banking industry. You might be able to apply right now, then you come down the road 5 years later and you haven't done anything, and then suddenly the market that you're going into is shrunk quite a lot. And obviously the less market, the higher prices. From a perspective of self-regulating, this is really something that I think we'll have a shifting market. The good thing from our side is that we see a growth of capacity being available for shipping and energy operations in the Middle East. International underwriters are coming in. They see the growth that's happening in the region, and they want to be here. They want to be present. They want to understand their business, and they realize that being on the ground is what needs to be done. The same reason why we have invested heavily into the whole region as a company, because we believe this is an area of incredible opportunities and growth, which we want to take part of. Thank you.